It's about that time of day again here, boys and girls. Welcome back to your nightly newsletter. Today is August 20th, 2014, a Wednesday evening here, broadcasting live from our corporate headquarters here at SchoolOfTrade.com in sunny Los Angeles, California. My name is Joseph James. Thank you, guys and gals, for sticking around here with me this afternoon. I know it's just about that time to break out the beach chairs. I know, we got summertime in full swing right now. Fourth week of the month of August, and boy, have we felt the summertime slowdown here this week. The name of the game this week has been patience, right? Patience, patience, patience. Now, we don't have to be very patient tonight, though, because I got a jam-packed newsletter here for you guys. It's been a great week so far, and we're going to keep this party rolling here tonight on a Wednesday evening. 3 goals today. First, we'll take a look at what happened today. Second thing tonight, we'll take a look at what's on the schedule for tomorrow. Get you ready for tomorrow. And third, we'll save the best for last. We'll wrap up tonight's newsletter with strategies. Whether the market goes up, down, or sideways, you, my friends, will be ready to react. By the end of tonight's newsletter, you'll know exactly what happened today. You'll know exactly what's on the schedule for tomorrow, and you'll be ready, locked and loaded, whether we go up, down, sideways, or wherever this crazy market takes us on Thursday morning, the 21st. Let's jump right in. Before we get started, though, I want to remind you guys, if you're not watching this video on our blog right now, if you're on our YouTube page, if you're on somebody else's page right now, make sure you get over to sidewaysmarkets.com. There's a link below the video on our YouTube page. Find that link and head over here to Sideways Markets for 3 specific reasons. Reason number 1, you can download all of my charts every evening. So all the charts you see me going over here right now. In addition, I've also included a dozen bonus charts. All the charts, larger time frames, more details. I can't go over them all with you here in this video, but I put them up in the download here for you guys right below today's video. Number 2, upper left-hand corner, I have a free pass for you guys and gals. Now, a lot of people call the office every day and they ask, how do you use these levels, right? Are these just a bunch of random numbers you put on your charts that magically work? Certainly not. There is a method behind my madness. I won't say I'm not mad, right? But there's a method behind the craziness here in our School of Trade headquarters. I would love to show you in real time how we use this material to profit every day in our trade room. Take me up on that offer, guys. It would be foolish of you not to, especially if you're a brand new trader. Come out and join me in the trade room tomorrow or any day this week as a guest. Last but not least, the third thing here on the blog, I've got a newsletter mailing list, and I would like to send you a copy of my newsletter every evening when it goes out. Always before 8 o'clock Eastern Time. Give me your name and your email address. And then one thing, though, once you give me your name and your email address, you press submit, make sure you check your email. Check your junk, check your spam folder. Make sure you get that verification email from me. I'm going to send you an email to verify that you've registered for our newsletter. 3 important things on the blog. Number 1, download today's charts as well as a dozen or so bonus charts. 2, grab your free pass to come out and see me in the trade room tomorrow. And 3, register for your nightly newsletter mailing list. That way you're always updated once the newsletter is done Monday through Friday. Alrighty, now you know the deal. You ready to rock and roll? I'm ready to rock and roll. Let's get started. What happened today? Boy, well, we started the day today very, very low volume. We're in the 4th week of the month of August. So it's just screaming at us right now, right? It is screaming at us right now that we need to be patient, right? Volume is low. Summertime kicks into high gear. Last 2 weeks of August, traders are anxious for the first week in September. Why? Because that's when Labor Day holiday is the official end of the summer. It finishes off the summer driving season and everybody's back to work, right? So we can all get back with our lives here in the markets again. We had a ton of Red Star news. Today, we heard from inventories on crude. Boy, inventories getting killed right now. Well, inventories were lower than expected. Demand was lower, and prices kept on tumbling today on crude. We were ready for that. We've got more Red Star news tomorrow. We'll talk about that in a second. The geopolitical events, right? The fear factor is dropping like a rock right now. The ceasefire in Gaza, the de-escalation of violence between Russia and Ukraine, right? We've got a lot of stuff going on out there right now, but the dog days of summer have definitely settled in here right now. We heard from the FOMC this afternoon, 2 p.m. Eastern Time. We got a copy of the FOMC meeting minutes. If you want to see the highlights of that FOMC meeting minutes, I would recommend it. Go right below today's video, and I'm going to put a link right below today's video that says the notes from today's FOMC meeting minutes. I would recommend you read those. Those are pretty darn important, and they're quite interesting this time around, listening to all of the positive stuff they were seeing, and a couple people part of the FOMC disagreeing with Janet Yellen and the rest of the crew at the FOMC. So definitely take me up on the offer. Read the meeting minutes, the notes, the highlights that I posted on our blog. And of course, don't forget, we're also waiting patiently here. Today was the beginning of the Jackson Hole Economic Symposium. Right, so that starts today in Jackson Hole, Wyoming, and then we'll be hearing from major political figures, economists, and Fed speakers throughout the rest of the week here, being highlighted by Janet Yellen on Friday morning. So a lot of stuff happening today. We had inventories out this morning. We had bright and early news from Europe. Again, summertime doldrums, though. Summertime slowdown, definitely in full steam ahead. Let's jump right in. I'll start here with the old black gold. It's been another day of downward pressure here on the crude. As you can see right now, we continue here this path dropping here more and more as we go, right? We continue here to push lower. Today we finally got below that 92.98. As I'm filming this right now, though, you can see that we have been able to poke our heads back above that 93, though. We are in a very strong downtrend right now on crude. Think about the fundamentals, right? Think about the fundamentals right now that are pushing this crude market lower. And we start to think about things like that love triangle we talked about earlier this week, right? Where right now we're seeing very poor news out of the euro, which is pushing the dollar index higher, which of course is making crude oil cheaper in relationship to it. So the euro is getting slaughtered right now. The USD by default is going higher because the USD is a basket of currencies made up the majority of the euro. By default, the euro goes lower, the dollar has to go higher, and of course that is making it easier for us to buy crude, which means the supply is much higher, the demand is much lower in relationship to that supply, and prices will tumble. If you really want to go down the rabbit hole, we talk about the de-escalation of violence in the Middle East. The ceasefire in Gaza continues. And again, that summer driving season is right around the corner. Professional traders are looking around the corner into the middle of September and thinking, well, I've got the October contract, November contract is cheaper, so right now we've got front month contracts. If you forward out to October and November, the prices are lower. Doesn't happen very often, right? When was the last time you saw the November and December contracts on crude at a cheaper price? Yeah. So you can definitely tell traders and analysts they're banking on this price going lower right now. And unless you've been living under a rock the past few months, I think I've been the biggest bear of them all, right? I've been cheering this thing lower the whole entire time, and we have made some incredible income on the way down. So fundamentals have been very easy to peg here with prices going lower. Now, open up my anchor charts here. Everything's all fine and dandy, right? I can get a great job at CNBC if I can call direction. But what they don't do at CNBC is give you exacts, do they? No, you got to come to SchoolOfTrade.com for that. Wouldn't that be nice if the gurus on CNBC told you exactly where to buy and where to sell? Yeah, they can't do that, can they? No, they're not real traders. They're on television. Anyways, what's my trend right now? Right? 3 steps to success. What's my trend? Trend is down. Where's my setup? Members, you know this. Setups here, right? Got my setup areas here. And then last but not least, Where is my entry pattern? Where's the entry trigger? Well, you'll have to come out and see me tomorrow for that information in real time in our trade room. So right now, very easy to see, trend is down. I've got red clouds. I'm below all the key moving averages. The structure is down. Lower lows, lower highs, no question about it. The hardest part about this has been waiting patiently for price to get into our setup zones. As you can see, downtrend, step 1. Setups, step 2. I've got setups here to sell short at 93.98, 94.56, 95.72. We also have a bit of symmetry in here as well, but of course, any of these areas will capitalize on that as well. Step number 3 is to find the entry trigger. We go up into the area, come out and see me tomorrow morning in our trade room, and I'll show you how I look for that entry trigger, because after all, that's what makes us our money, getting in at the right timing. So we don't have a lot of risk, no risk, right, and a lot of reward, right, using proper risk management so everyone can use small stops and wide targets. As we go lower, 92.15, 91.24, 90.10. Those are my targets as we go lower here, guys, on that 32 anchor. Now, don't forget, I got a bunch of bonus charts. The 32 anchor chart, I got a bunch of bonus charts. This is one of them here for all you crude traders out there. Don't say I didn't warn you. Make sure you download those bonus charts here. Next up here, on the 16 anchor here on the black gold. Oh, you were looking for a little bit faster response here. Looking for a little bit earlier entry? Okay, here we go. Again, 3 steps to success. What's my trend? Trend is down. How do I know? Red cloud, lower lows, below the key moving averages. Where's my next sell setup? You got it right here, 93.50, 93.70, 94.02, 94.82. Don't forget the top of that trend line. Okay? Setups are everywhere. Where's my entry trigger? Entry trigger? Yep. Come out and see me tomorrow, and I'll give you the entry trigger live in real time as we call trades before they trigger in our live trade room. We've got targets down below. As we go lower, 92.62, 92.36, 91.82, 91.12. And don't forget, we got the low of this long-term channel down here. So that will also be a target for us, right, to use as well. Looking to sell short right now. Again, the hardest part about being a trader this week and most likely next week will be staying patient, right? Staying patient. So we got the sell zone being tested right now. Green light here to the downside to get into those next entry patterns short. Members, I'm looking at you right now. You know exactly what we're waiting for here right now on crude. The hardest part right now is just simply waiting for the next entry trigger to give it a shot here to the downside again. If we do push higher, though, don't be surprised. 94 area here, 94.35, right? And then we'll look again. All right, guys? Once again, download those bonus charts and come see me tomorrow morning in our live trade room, and I'll walk you right through what I'm seeing tomorrow at the opening bell. Moving here from the black gold to that funny yellow metal we call gold futures. We've got some crazy stuff here happening on gold right now. Been a little bit of a sloppy, choppy week here, as you guys have probably noticed. We get the Jackson Hole Symposium later on this week, or actually starting today. We'll hear from Janet Yellen. We had FOMC meeting minutes this afternoon. Perhaps they were waiting for the FOMC meeting minutes. Perhaps we're waiting to hear more from the Fed later on at Jackson Hole. Perhaps all the gold traders were busy putting on the sunblock instead of trading this week. It's definitely been a very low volume week on the gold. So again, patience is the word here on gold. Let's talk fundamentals right now. Violence in the Middle East is cooling off. The euro, again, we continue to hear about the euro, and now we're hearing from the Asian markets right now. Asian equities here are having a difficult time right now, seeing some very, very weak numbers out of Japan last night, going into China later on this week. We have a ton of reasons why gold is pushing lower right now. The big thing is gold is the fear factor, right? The gold market is the finger on the pulse of what's happening out there in this world. If you turn on the news shows and the news says it's the end of the world, but gold's going lower, you know those news broadcasters are full of you-know-what. Well, they're probably full of you-know-what no matter what they're saying. But the reality is we use the gold to cut through all the BS that we see in the newspapers these days, right? If gold's going lower, the world can't be that bad, can it? Certainly not. This shelter market continues to push lower here, and you can see we're still right in pretty much the middle of this range right now, but we get a target down bottom here. If you look a little bit closer here, it's 1281. 1281 is the range low here from last month. Then we go down to, dare I say, 1265. I think this gold, though, is suffering from a little bit of analysis paralysis right now as we go into the end of that third quarter. Remember, the end of the third quarter is next month, September. So we'll be seeing always a very big pickup in gold end of the year. So we'll be watching this thing closely. You know me. Come see me in the trade room tomorrow. We'll walk you guys through what we're seeing there in real time. Moving forward here, though, from the daily chart on gold down to the 32 anchor, we're making new lower lows. We got a bearish trend, but here is a classic example of why new traders struggle. You cannot sell right here, right? We talk about, we do a lot of teaching while we trade in our trade room, and we talk about the 3 steps to success, right? What's my trend? Trend is down. That tells me I want to sell. I want to stay to the sell side, but now where's my setup? Right? My setup is not here, right? I got to wait till we go a little bit higher here to get into the nice sell setup. And so we talk about this throughout the entire session today and every day in our trade room. That's why it's a great place for a new trader to kickstart their career, because not only are you going to learn the fundamentals of trading, you'll learn proper entries, proper exits, risk management, trader psychology. A lot of this is psychology, right? I mean, that's really what it is. A lot of this is psychology. Can you keep your mind under control? That's the Holy Grail, right? Isn't that right? That's the Holy Grail. The Holy Grail is between my eyes and ears. I don't care how fancy-dancy your indicators are, if you can't keep the fingers off the buttons when you shouldn't be trading, or if you don't know you shouldn't be trading, right? You got a big problem out there. Come see me in the trade room. We know trend is down right now, but we are priced at a discount, right? I don't want to sell my pocket full of gold coins when prices are at their lows, do I? Certainly not. I'm going to sell my pocket full of gold coins when prices are at their highs. So rather than selling now, why don't we wait here for price to go up a little bit? As I always say, let some other poor sucker sell the lows. I'll let them make those new lows here. Once I know where the lows are, then I wait for it to come back up, and then off we go. I'll take some profit here. We'll take some profit here on the way back down, right? Patience, grasshopper. Patience, right? So we want to wait here. 1301, 1306 half. I doubt we go to 1316 for tomorrow, but possibly. Right? Possibly. As you can see here, again, make sure you download those bonus charts, because you can see if you zoom all the way out, you can see a big channel here. So make sure you grab a copy of those bonus charts here. We get a channel inside of a channel, right? So we get this big long-term channel. And then the short term, we have a little short-term channel here. Right? So we got 2 channels on this chart. You can see one of them a little bit larger than the other. I've got sell zones overhead. Those are my setups. I am crazy here to be selling right now. I've got targets down bottom here. Now, if we do go up, right, and come back down, we will definitely use this 90.3. Actually, what it will be is we won't use the 90.3 because, as you see, the 90.3 has already been tested. So the next target here is going to be the 85.9. 82.7, 75 even, and then depending on where we are, don't forget, you got the low of this trend line, right? This channel low. So you follow that channel down, that low will be a good target. And then also, don't forget about this channel low as well. So we got a bunch of different areas here where we can grab that runner. So that real long-term target here may not be here tomorrow, but be on the lookout at the bottom of that long-term channel. It's just begging us to get short right now on gold, but we've got to wait patiently. Moving forward here, last but not least here on the gold anchor charts here, you want more precise, do you? Right? You want to go in a little bit earlier? So you're telling me you don't want to wait until 1301? Okay, I understand. Right? I understand. These kids these days, they don't want to wait all day long. I understand. Here's some opportunities here for us to get short. 1294, 1296, 1297. Is it everything here is a good spot to sell? We do have quite a few sell zones here. Now, let's not just guess. Follow the plan. What's my trend? Down. How do I know? Red clouds. I'm below all the key moving averages. Easy. Where's my setup? Right? That's the tough part. Now, believe it or not, we actually do have a sell setup right now at 1293. So trend is down, but now the hard part. Wait for the setup. 1293, 1294, 1296, and 1297, along with the top of this short-term channel, right? So you're going to run right into that channel here as we go higher. I've also got, there's that 1300.1, right? That was the one from the 32 anchor, right? These were the ones from that 32 anchor. So these three right here, these four right here, are going to be off of the short-term anchor chart. And the reason why I do this is so that you, as a guest on our newsletter, you can use this however you want to. If you're a longer-term trader, use the daily or the 32 anchor. If you're a scalper like me, use the short-term 16 anchor. And if you're smart, you'll come in and join me tomorrow in our live trade room. That way, right, that way you've got the real-time entry calls, exact entries, exact exits. Okay? So we got quite a few selling opportunities right now. All I need now is to see this thing roll over, give me some entry patterns, and I'm off for the races. Guys, I am going to ignore this 1290.3. That 1290.3 is dead in the water, which now means I've got targets below me, 1288.1, 1285.9, 1285.1, and 1282.6. So pick your spots wisely here, but I've got some easy spots here to look for those selling opportunities here on gold, and then even easier, we've got targets waiting for you to the downside. Moving forward from that funny yellow metal over here to our E-mini Russell. Boy, these equity markets, they've been very bullish this week, but today we got a little bit smacked around on the mini Russell. Everything else pretty much pushing higher here today. But the small cap stocks, this is my favorite E-mini. There's a reason why the Russell is my favorite E-mini. There's actually a combination of reasons. First of all, it's illiquid. Now, this may sound bad, but if you've ever tried to trade the S&P, you know what a liquid market feels like. It feels like it's asleep half the time, right? Now, some people love the S&P, and we have many students at School of Trade that do very, very well applying our methods to the S&P. It works the exact same way, but if the S&P moves for one pattern, I get 5 patterns on a market like the Russell. So the first thing would be the illiquidity. Now remember, it's a balancing act, right? It's a balancing act. When it comes time for you to pick, who the heck is calling me in the office? Don't you know I'm doing a newsletter right now? Get out of here. There we go. It's a balancing act. What you end up getting is if I have a lot of liquidity, I will not have a very large range, right? So liquidity goes up, and the range will go down, right? Take a look at a market like the S&P, compare it to a market like the Russell. The Russell is considered illiquid in comparison to the S&P or the Euro stocks, right, in Europe, or the SPI, right, in Australia. You get the point, right? So we know that larger liquidity leads to smaller ranges. We make money with larger ranges. You keep going forward on this. You also know that the NASDAQ at $5 per tick, right? You got the NQ, you've got the YM, those are $5 per tick. You go the other direction, $12.50 per tick is the S&P. Well, of course, the Russell is nice and convenient at $10 per tick. I really like that $10 per tick. I find that the S&P can be a little bit expensive for a smaller trade account. And then on the flip side of that, I find that trading at $5 per tick, I find that to be an inefficient business model. You know why? because I'm still going to have to pay about $4.75, right, per round turn. My commissions are not going to go down just because I'm trading a $5 per tick market. Make sense? So the knife cuts both ways. I'm not going to make as much money, but I won't lose as much money when I trade the $5 per tick. But comparing to my cost of doing business, it's not as efficient of a business model. Oh yeah, that's right. I'm not paying. No. I'm not playing video games. This is not a hobby. Yeah, no, wrong YouTube channel. This is not video games and hobbies. This is real business. So yes, I do have to operate like a real business owner. That's one of the things we do in our membership classes is we talk about structuring our trading business, right? Incorporating, choosing the right CPAs, making sure we manage our risk, making sure we understand how to manage our emotions. These are all parts of being a business owner, whether you're a day trader or you open up Joe's shoe store, right? So again, couple different reasons why I like the Russell. I also like the Russell because the Russell tends to give me consistent trading opportunities every single day. Now, you can apply this strategy to anything, but we definitely have our favorites. My favorite being the mini Russell. Now, we trade all the E-minis every day in our trade room, so don't let me get, don't get me wrong. We'll definitely trade whatever we want to here, but my favorite being the Russell. Moving forward, though, the Russell here got a little smacked around today, right? We talked about this last night. Had a very nice move here earlier this week, a classic low volume run. This week was a classic low volume run. You can tell low volume moves, low volume rallies are one of two scenarios. Either bam, right, or this. Okay? These are the two scenarios you see for a low volume rally. The Russell gave you the one on the left this week. What is that? That is low volume. While the cat's away, the mice will play, right? See ya, sucker, right? It just took off. And what that ended up doing was it ends up leaving the door wide open for a big collapse back down, right? Catches up to the moving averages, et cetera, et cetera. We talk about that all day long in our trade room. When we see big straight lines like that, we tend to look for reversals. Well, basically, the pullback is asking for a failure. You want to see an example of the right side? Look at the NASDAQ, right? The NASDAQ this week was a great example of how we saw the grind, right? Just grinding higher here. We're not getting big moves out of it, but it keeps on making new highs and pulling all the way back. It's very challenging to buy those highs because it pulls back so far, it will stop you out and then keep going. So it's definitely been a bit of a challenge with these low volume environments, but these illustrations are good examples of low volume rallies. Okay? Either it goes straight through the roof or it grinds lower, right? 2 ticks up, 10 ticks back. 4 ticks up, 15 ticks back. Okay, so now you know more about the person we're seeing right now. And so we saw in the Russell, we saw this jump, right? We saw this almost straight line. And we talked about this morning. You can see how we bounced off that resistance zone there on the Russell. You look at the anchor chart now, and we finally pulled back. And we were drooling over this thing in the trade room. It just never got going. It never got out of neutral. If you recall, we've been here all week pretty much, right? We jumped up here first of the week, and we've been waiting for this dump-de-dump, dump-de-dump-de-dump. Oh, you talking to me? You want me to pull back? Yes, please. We can take this now, please. Please pull back here so we can buy this thing. We had the chance to buy the 52.5. We looked at it. We looked at it. We looked at it. I checked the pulse. There was no pulse. It's just real quiet. And apparently, this 52.5 apparently is not, it's not starting the engine. Remember, guys, these numbers on my chart are where we expect what? Traders to react. If we don't get, as I always say, if we don't get the electric fence, right, if we don't get that reaction here, right, then clearly that level is wrong. So right now we have some concerns. Volume is a big concern right now going into the week here right now. We're going to wait for price to pull back into our zone, but I got to be honest. We've got a small range here right now. We can get to buying right now. We definitely have the pullback, but paging Dr. Russell, we're looking for a pulse. We have no pulse right now, right? So that's what we're waiting for here right now. Hold on, hold that thought for a moment. I'm going to show you the next chart. Next chart's going to show you exactly what I'm talking about. Right now, though, what's my trend? Don't predict, react. What's my trend? Trend is up. Simple. What direction do I want to go in? I want to buy. Where do I buy? Do I buy at the highs? Do I buy at the lows? Do I buy at the middle? Where do I buy? We buy at a discount. If I'm going to buy a brand new pair of blue jeans, I'd rather buy them at a discount. Buy a brand new home, buy it at a discount. Buy a brand new car, buy it at a discount. We don't want to buy something after it's doubled in price. We want to wait for it to come back. So I know I want to buy. Where do I want to buy at? I want to buy at a trade setup. See, this is how new traders become successful traders in a very short period of time. You don't need to know everything. What's my trend? It's bullish. How do I know? It's green on my chart. Rocket science? Nonsense. Very simple. Where's my setup? Now, the setups require a little bit of learning, and I'll teach you how to find the setups. We have over a dozen different setups in our trade room. They're very, very simple. I now look for a setup at 52.5, 45.5, 41.3. I've got 38 symmetry, and we've got 35.4 and 31.9. So now I know my trend is up, and now I know exactly where I want to begin looking to buy. Doesn't mean I'm going to buy it blindly. It means now, once I go higher, I pull back to 52.5. Once we start going higher, now I know it's time to buy it. Again, we saw it pull back to 2.5. I got into the initial order today, had to get out of it just sitting there through lunch. I mean, I'm sitting there right at my point of entry, waiting for this thing to get something going on. And again, like I said earlier, we didn't have a pulse. Now, if you saw the same thing I did, you're probably wondering, okay, Joe, what do you suggest we do then, Mr. No Pulse? I'm glad you asked. Here's what I see so far. I can see here once again, now on my 16 anchor chart, what's my trend? See? Now it's changed a little bit. The first two charts were easy. Trend was up. What's my trend now? It's not bullish. It's not bearish. It's neutral. Right? So right now, we have a neutral trend right now. How do I know that? It's easy. I got one red, one green. In fact, it looks like we just got back to green here in the last few moments, right, since I began this call. So it looks like we are bullish, but I'm going to go ahead and say neutral. All right, until we get a higher high. That's what I was going with, right? So we're neutral. We've pulled back into a setup. We got the green light here, guys. We have the green light right now. I pulled back into my next buy zone. By the way, this buy zone was on last night's newsletter too. All right, this is not a moving target for you guys. This is on last night's newsletter. Go back and watch. You'll see it was the whole time. So this level here, 49.9, we pull back. We test it. Now, under normal circumstances, I would say green light, the next buy pattern we get, we're out of here to the upside. But the reality is, though, is that we can see I've got 1, 2, 3, 4, 5 tests of that high. Look back in time here, right? This now becomes my range. So I have a very easy to find range here right now. If it wasn't the 4th week of August, I would be a whole lot more inclined to say, heck, just go ahead and buy it. Well, buy it with the next pattern. But I'm going to be a little more specific with you guys and gals. I want to see it get above that 7.3. Then I've got my green light to back to the buy side again. I'm not buying 7.3. I'm now considering the buy above 7.3. So how are you going to know exactly where to buy? You're going to join me tomorrow in my live trade room. All right? Sideways range from 49.9 to 57.3. Tomorrow morning, we're going to look very closely if we are still inside of this range, and I'll bet we are. My gut tells me tomorrow, the way this market finished the session today, it looked like it was dead. I mean, it was completely dead. I had to restart my charts a couple times to make sure the charts weren't broken. I hope I'm wrong, though. If we go above 7.3, then we're green light. right, to get to buy-in. Now, do you remember how I said earlier that there is a very telltale sign of a low volume rally? See that right there? Right? See that big straight line? It never pulled back. Remember, normal price action does this. Right? Normal price action does this. This price action did that. In my opinion, that is equivalent to standing up in a movie theater and yelling, "Fire!" Right? Everyone's in a panic. No thinking, no rational thought, just get me out of here. Right? So that's what we felt earlier this week. Now, whenever we see big pops like this, what usually happens is the moving averages have to keep up now. But people like me are expecting this thing to come right back to where it came from. If it was just as easy to get there, it'll be just as easy to come right back to it. Think about that for a second and plan accordingly. So we know we're bullish right now, but this low volume rally late last week into early this week, we heard from the FOMC meeting minutes today. They painted a pretty rosy picture for the U.S. economy. They really did. So that's not hurting us right now. The only thing we have on store for tomorrow, and I'll segue now into my next chart here, which is my news. Here's what I see being the biggest risk to these E-minis on Thursday and Friday. And it has everything to do with U.S. housing. Housing and manufacturing tomorrow morning at 10 a.m. If I had to guess right now, I would guess tomorrow the big move happens after 10 a.m. Let's talk about tomorrow's news. You know what I'm looking for, right? I'm looking to be a buyer here on the Russell. But again, I need to find a pulse first. Tomorrow is Thursday, August 21st. We've got news tonight out of China. Like I said earlier, we heard from Japan last night. Tonight we'll hear from China. Just a little bit of an important news report, right? Manufacturing out of China. Yeah, right? You look up the term no-brainer, okay, in the dictionary, you'll see manufacturing news from China. That's a no-brainer for tonight, right? Manufacturing is their biggest industry in China, possibly the biggest in the world, and that's going to be very, very important to see what happens tonight in China. We then go right down the list here. We've got merchandise trade out of Switzerland. We go into Germany, 3:30, France, the EU at 4, Great Britain at 4:30, and then we go down to the U.S. session at 8:30. You want news? Okay, we got a little bit of news for you tomorrow. You can see here. 3:30, 3:50, 4 a.m., 4:30, all of that in Asia. I'm sorry, all that in Europe. So Asia starts at 9:45. Europe kicks into high gear at 3:30, 3:50, 4 o'clock, 4:30. And to be very honest, though, I don't think that's the news that's going to be on everyone's radar tomorrow. I hope I'm wrong, right? I hope I'm wrong. And you definitely want to be watching tomorrow morning in the European session. When is the European session, by the way? The European session goes from 3 a.m. until 7 a.m. Little pause in the action. By 8 a.m., we're back in the U.S. And, of course, the U.S. will go all the way till 4 p.m. Okay? So what you want to remember for tomorrow is that you want to be on the lookout for personality tomorrow morning in the European session. But check this out. We've got some very important news here. Very important news for a couple of reasons. First of all, manufacturing, right? The Philadelphia Fed survey, the Philly Fed, right? The Philly Fed, one of our favorite news reports. If there's one underrated news report out there, it's the Philly Fed. This is it's a great news report for moving around pretty much everything. I think, though, the big number is going to be the existing home sales. We get a nice big jump earlier this week from the housing starts on Tuesday and the housing market index on Monday. All of these numbers have been very rosy. They've been very, very good. Will it continue? Now, the reason why I say this is because there's been one sector of the U.S. home market, housing market, that has been underperforming. What is it? It's the single-family residential. That would be existing home sales. Here in Los Angeles, you can't even find a home to buy. You can't. There's no inventory, right? The banks haven't released it. The people who own the homes, they're not selling it yet. So it's been a moving target, this housing market. I think tomorrow, my own personal opinion, Be ready for the fireworks after the existing home sales number tomorrow morning at 10 o'clock. If you're a natty gas trader, you got 10:30 a.m. inventories tomorrow. Again, only for nat gas traders, though, tomorrow morning at 10:30. All right? We are cruising here into the end of the month of August, and with that comes Labor Day, and I can't wait for the month of September. But we got plenty of buying and selling opportunities right now. Again, the name of the game right now is patience, right? Patience. Now, before I let you guys go, I want to thank you so much for being a part of our newsletter. Encourage you guys to head on over here to SchoolOfTrade.com, join our free trial. Give me a call here. We got someone standing by here 24 hours a day, 7 days a week. We've got 3 levels of membership, and you can learn all about those by visiting our website at SchoolOfTrade.com. I get a free pass for you guys. Come join the trade room tomorrow. Don't forget to download today's charts and join our nightly newsletter. That wraps it up here for me, boys and girls. Have yourselves a great Wednesday evening. Kick some butt out there on Thursday morning. Don't forget to come out and see me in the trade room tomorrow morning at 8 o'clock Eastern Time. And I'm going to take a deep breath and relax the old vocal cords. And I'll see you guys tomorrow morning in the trade room, 8 a.m. Eastern. Broadcasting live from LA. My name is Joseph. You guys have a great day out there. Adios, amigos. Bye-bye for now.